Hi everyone. In today's video, we're going to be talking about one of the biggest macro themes over the past year and a theme that has a chance to surprise a lot of people in the foreseeable future. That's right everyone, we're talking about the almighty Fed pivot where the Fed finally lowers interest rates, which will lower mortgage rates from their unbelievably high levels now. But what people aren't expecting is the reverse Fed pivot, and I will explain this later in today's video. We're going to talk about this concept in plain, simple English, nothing too complicated to understand. Even teenagers will understand what I'm saying in this video. Now, a lot of people have completely banked on the concept that a Fed pivot is going to be good for the economy, good for the stock market, and good for the housing market. I'm going to bring up the case as to why a Fed pivot isn't necessarily going to be a good thing for housing, and in fact why it could shake up the housing market in a way that you might not like. But first, if you're new to my channel, welcome. My name is Larry and I talk about big picture macro themes here on YouTube. In my Substack, I dive deeper into the finer details of intraday scalping and long-term investing. Make sure to subscribe below for my latest updates. Follow me on Instagram and Twitter where I post frequent commentary. Okay, so here's the situation with the current state of the economy. Right now, Biden's economic policies, also known as Bidenomics, has Americans feeling rather gloomy about their economic circumstances. Well, if headlines are so optimistic, well then why are people feeling this way? Well, this is because for as long as we can remember, the American dream has been to own a home. Own our own property, pass it on to future generations. This has been the tried and true way to build wealth for most people. And right now, people who want to be homeowners have a very hard time doing so. And people who are already homeowners who want to get a new, higher paying job in a different area can't easily do so without giving up their home. They're less mobile, thanks to housing. And folks who are older and want to downsize their property so that they don't have to deal with the ridiculous maintenance fees and property taxes of keeping a large house, they can't do that easily either. The illiquid nature of the housing market has basically not only locked people into their homes, but in some sense, it's also locked them into their circumstances. So let's talk about why the Fed pivot may actually make the housing crisis that we're in now even worse. Now, understand that this opinion may seem counterintuitive, but I need to share it because I think I'm going to be right. So the common sense logic behind the Fed pivot being good for housing works like this. Right now, with mortgage rates at 7%, these high rates have essentially caused housing sales to be very slow. And we know this because Redfin's CEO has publicly talked about how housing is in a recession right now in terms of transaction volume. In fact, Redfin has had to lay off over 40% of all of their agents over the past several years. That's very sad. So if these mortgage rates come down, then the monthly mortgage payments on a home is going to be lowered, and this will make home ownership slightly more accessible. And with these lower rates, consumers will feel less stressed about their credit card APRs because they're going to go from 24% where they are now to something lower. Home lines of equity rates will come down, auto loans can be refinanced lower. We can all sigh a breath of relief because once we get about 100 basis points, which is 1% of relief in rates, this is actually going to be quite helpful to change the situation for the better. But here's the problem, and it's quite insidious that this problem is. Before we talk about it though, I need to talk about our video partner today. They help me with my productivity and my research gear, making my workflow more efficient to make videos such as this. When I'm on the go, I have a couple neat items that help me organize and protect my work gear. One of the things I do now is have my Bellroy Tech Kit organize all of my tech items in one smart kit. The tech kit holds together my charging brick, power bank, as well as my mouse and cables all in one nice compartment. It also has space of earbuds, a stylus like an Apple Pencil, and other spare tech items. The kit has a nice clamshell design which allows me to open it for flat, easy access. I like this minimalistic design because it really helps me get organized. Everything is in one neat place. Because I often have to do a lot of multitasking throughout the day, I really do appreciate items that hold everything nicely in one place so that I don't have to worry about having misplaced anything. When I have my laptop with me, I place my 16-inch MacBook in my Bellroy laptop sleeve, which has a durable fabric, which is water resistant and offers soft protection. I particularly like it because it has a slim build, which allows me to reduce the bulk in my bag. Most laptop covers are very bulky, but this one is really well designed to not take up any precious space. The unique part about the laptop sleeve is that it has a magnetic entry with no zippers, so that it almost looks like a premium executive folder. Definitely a very cool look to it. Whenever I'm out of my home office to do work, my Bellroy laptop sleeve and tech kit help me stay organized and minimalistic. The neat design of these products inspire a professional and sophisticated look while also being very practically designed to organize my items. Bellroy is a certified B Corporation where the materials they use to make their high-quality products are good for the environment. B Corporations mean that they are a business that is used for a force for good. The company is based in Melbourne and they ship worldwide. They have really high-quality premium products and has grown to have a global fan base. Thank you to Bellroy for partnering with my channel to provide my viewers with high-quality gear to help them organize their belongings in a minimalistic yet sophisticated way. I'm so happy that this premier brand is giving 10% off to my audience on anything from Bellroy.com, link in the description below. Now, back to the video. So I'm going to ask you a really important question. Have you noticed lately that something has been very off at the Fed? In March, they had their Fed meeting, and at this meeting, Fed Chief Jay Powell said that inflation is under control. Everything is fine. The economy is booming. You are doing well. But literally, not even 30 days later, we get a barrage of Fed speakers saying that they may cut twice rather than 3 times, or maybe just once, or perhaps even none. And maybe, just maybe, there might even be a hike. So how does any of this make sense? What is going on here? Allow me to explain. If you're paying attention to the situation closely, here's what's going on. The Fed is very confused about the state of inflation. They essentially have no confidence in their forward outlook of inflation beyond every month's report. I mean, the so-called dot plots that they have in the Fed meetings, they don't even use them. It just seems they essentially make their whole monetary policy projections now from the next incoming inflation report or the jobs report. They're being extremely reactive to what I think is very noisy data that lags. Now, many neighborhoods have suffered tremendous corrections, like San Francisco, like many areas in Florida and Las Vegas. But at the national level, the housing market is still being propped up. But once the Fed pivots and mortgage rates fall 25 to 75 basis points, investors and buyers with cash will flood back into the market in droves. And we know this. How do we know? It's because in the pockets of this year, in 2024, where mortgage rates had fallen back to 6.5% for several weeks, home sales were up year over year in those particular months, and those volumes accelerated rather quickly. If the mortgage rates come down to the 6% neighborhood, I can assure you that you will see a mad dash of buyers foolishly entering the market in the hopes that they can buy high and sell even higher. House flippers and speculators will come back because the cost of capital is now lowered. Now, you might think that the greater fool theory is only for stocks, but soon I think the greater fool theory also applies to housing. And with this madness back into the housing market, what's going to happen? It's going to lift the housing market back up, and everything associated with also rise, such as home improvement, insurance, maintenance, labor associated with it. And in several quarters, housing is going to rear its ugly contribution back into the inflation data. The Fed is going to look at the inflation data, get even more confused and frustrated, and then do a reverse Fed pivot back to raising rates again to get back to their inflation 2% target. If and when they do a reverse pivot to raise rates, that is going to unexpectedly slam the housing market and all the new buyers who just entered the market at high prices. Right now, homeowners feel fine because their entry point was a few years ago when prices were lowered and rates were low. New homeowners, though, will not feel fine if their entry point is high and the Fed's reverse pivot pushes them into negative equity on their house. Essentially, what I'm saying is that the so-called strength today of the current housing market is going to be its undoing in the future. An increased demand for housing after the Fed pivots will ironically cause them to eventually do a reverse pivot because they realize that inflation actually got worse. And from there, the real crisis begins as markets experience tremendous volatility and the wealth effect of rising asset prices begins to reverse as people realize that they have made a huge mistake. Now, I know what you're thinking. You're thinking, well, what are you supposed to do with this information? Well, what you should be doing is getting ready. The Fed's confused state is setting the stage for serious volatility across everything in the coming years, as I expect them to do a reverse pivot when housing adds even more inflation in the future beyond their expectations. Now, if you're a trader like myself, well, you can always short sell the real estate ETF as a hedge in an otherwise long S&P 500 portfolio. The real estate ETF is a turd, and it will underperform the S&P 500 for years to come. That's my opinion. Now, I know that you might find that funny, and you might be giggling from me saying that, but the VNQ real estate ETF is a massive turd wrapped in turd wrapping paper. But seriously though, get ready. Because if you thought the inflation saga widened the wealth gap in 2021 till now, you haven't seen anything yet. And with the dollar losing its value on almost a daily basis on inflation, I envision a world where you're either rich or poor, and there will be nothing in between. Now remember the famous saying from the World Economic Forum that you will own nothing and you will be happy. That saying might eventually end up being true for a lot of people. On a more optimistic note, if you remember from the movie Wolf of Wall Street, there was a famous saying by Leonardo DiCaprio. He says, "I've been a rich man, I've been a poor man, and I choose rich every single time." The message here is that you have to be excellent at your job. You have to not get fired. You have to learn how to invest. You have to learn how to trade. You have to realize that the stakes are going to get higher in the future. So I want you to be prepared. Now, some elements of today's video has a little bit of parody in it and a little bit of humor, but mostly ingrained in truth. A Fed reverse pivot is coming. Hope you enjoyed the video. Leave a like and subscribe. See you next time. Thank you to Belroy for helping us navigate the future reverse Fed pivot that is coming in the years ahead with excellent gear.